Hello everyone, in today's video, we will address the question about the method I'm using and whether it can be applied to trading markets such as cryptocurrencies, stocks, commodities, or indices, and which time frame is the most optimal. Not through mere theory, but through practical application. Let's get started. This is the chart of the index, S&P 500 from the US stock market. And as a day trader, I will select two time frames for analysis and trade execution. Those are the 1-hour time frame and the 15-minute time frame. Looking at this chart, we can observe that this is a clear downtrend. A downtrend. Therefore, we should only look for selling opportunities. In this case, the first step is to identify the key level of significance. This is the key level of significance. As long as the price remains below this key level, the trend will remain a downtrend, and we should only look for selling opportunities. This is a pullback trend, an uptrend. The price has returned to the key level of significance. Therefore, I switch to the time frame for trade execution, which is the 15-minute time frame, to analyze it more closely to see if the price can break through this key level or not, in order to find an early entry opportunity. And the price failed to break through this key level. At the same time, the pullback trend has also ended. It ended because the price broke through the key level of the pullback trend. Therefore, this is the time for us to consider entering a trade. I will enter a sell order in this case. The stop loss placed above here will be a safe stop loss. We target the low down here. And with this trade, we have hit our target. Here, this is a pullback trend, an uptrend. It is not yet a trend reversal, because the price has not yet broken through this key level of significance. Therefore, I switch back to the time frame for trade execution to observe more closely. Oh! The price has broken through this key level of significance. Therefore, now, the trend has reversed, turning into an uptrend. An uptrend, so from now on, we will look for buying opportunities. So when do we buy? We buy when we confirm that the pullback trend has ended. But in this case, a pullback trend has not yet appeared. Therefore, we will wait. This is a pullback trend, a downtrend. But this pullback trend has ended. It ended because the price broke through the key level of the pullback trend. Therefore, this is the time for us to observe for a trade entry. But if we enter a trade in this case, the stop loss would need to be placed below this low. That's quite far. With such a wide stop loss, it will be very difficult to set a target. Therefore, we will wait. We wait for the market to give us a better opportunity to narrow down the stop loss distance. price has almost returned to the low. It has failed to break through this price zone twice. So I will switch to the time frame. For trade execution, the 15-minute time frame, to observe closely. The market structure now has shifted to an uptrend structure. It has broken the downtrend structure. Therefore, we can enter a buy order. In this case, the stop loss placed here is already safe enough. But if you're still worried that this stop loss isn't safe enough, you can place it lower, which would be much safer. But based on my experience, placing it here is sufficient. And this trade has hit our target. It took 9 days and 23 hours, nearly 10 days, to reach the target with a risk-to-reward ratio of 1 to 3. That's too long. That's why I don't like trading indices. Trading indices truly feels like an eternity. So let's switch back to the familiar currency pair, pound sterling to US dollar. This is an uptrend. An uptrend, therefore, we will only look for buying opportunities. In this case, and the first step, we still need to identify the key level of significance. This is the key level of significance. As long as the price has not broken through this key level, the trend remains an uptrend. And we will only look for buying opportunities. In this case, the price has returned to the key level of significance. Therefore, I switch to a smaller time frame, the 15-minute time frame. Here, this is the key level of significance for the pullback trend. The price has broken through the key level of the pullback trend. Therefore, we confirm that the pullback trend has ended. The uptrend continues. And this is the time for us to enter a trade. If we want to enter a trade, we must place the stop loss below this key level. Below this low. That would be a safe stop loss. But as I mentioned, a stop loss like this is too wide. It's this wide. So it will be very difficult to hit the target. Therefore, we will continue to wait. We wait for the market to give us an opportunity to place a tighter stop loss. Oh. If we had entered a trade in the previous case, we would have been stopped out. This is a stop hunt. And when a stop hunt like this occurs, we cannot avoid it. We will definitely get stopped out. Let's look at this and analyze to see how the market is moving now, like this. If you look here, you can notice this is a double top pattern. A double top pattern in a downtrend confirms that the downtrend is likely to continue. And when we encounter a double top pattern like this, usually the price will plunge back down through this key level. But as we've analyzed so far, the downtrend has already ended. The uptrend has resumed. Therefore, this double top pattern is highly likely to fail. And if this double top pattern fails, there's a 90% chance that the market will reverse into an uptrend. And to confirm that, we will place a buy stop order above this price zone, above these two tops. Stop loss below here. Target with a risk to reward ratio of 1 to 3. And this trade has hit our target. I wonder if by now everyone has guessed which time frame I used for trade execution. It's the 1 minute time frame. That's right, the 1 minute time frame. But as you can see, the way the market moves and the way I analyze for trade entries is no different from larger time frames. Market structure exists across all time frames, from the 1 minute time frame to the daily time frame, the weekly time frame. Each time frame tells you a certain story. And the interesting thing is, the stories across different time frames are closely interconnected. When you truly understand market structure, you can trade in any time frame you want, even the 1 minute time frame. And that's also the answer to all the questions that many of you have asked me, whether this method can be used to trade crypto, stocks, indices, or Forex, and which time frame is optimal. The answer is, after mastering this method, trade in any market you want, and in any time frame you prefer. But make sure that, if you want to trade the 5 minute or 1 minute time frame, you need at least 1 year of experience with this method, or you must be consistently profitable in larger time frames first, because smaller time frames require very quick thinking and a sharp, flexible market perspective to filter out noise. These are things that beginners lack. So for now, trade at least on the 15-minute, 30-minute, or 1-hour time frame first. Once you're skilled, you can trade in any time frame you want. Goodbye everyone, see you in the next videos.